Howdy, Jacob here. Company 47. We're making some damage there on our dividend yield stock screener is Eastman Chemical Company. Let's get into some financials. So 3.81% dividend yield. When I when I did the screener, it must have been just over 4%. Stock must have risen just a little bit. So pretty consistent on the revenue side, almost flat, but really maybe increasing 1% a year given the fluctuations. ROIC, nothing special. $10.1 billion market cap, $14.2 billion enterprise value. So a little bit of debt here. Let's see, $4 billion in long-term debt, but it's down from pretty much flat from 10 years ago and down from 8, 7, 6 years ago. So that's good. Looks like they care about not being too risky in their dividend expenditures. So let's see, 900, 1.1, 1 billion, 1 billion, 1 billion. Okay, that 373 million that they're paying out looks like they can afford that. A company that buys back shares, interesting. We'd really have to look at that to make sure they're buying them at the right time and make sure the company's not overly inflated. You don't want management buying back shares when they're expensive, but um, interesting to see that they've been buying back shares consistently and paying a dividend and really paying down debt quite a bit, other than recently relatively flat. So um, and we can say it's probably a little under $1 billion on the free cash flow side and 4 billion, like I said, in long term debt. That's 4 times cash flow. That's pretty reasonable. I don't think that's too excessive or anything. And like I said, this dividend is fairly consistent and isn't paying out. The payout ratio isn't too ridiculous. So let's start making some assumptions here. This might be okay. I don't know how it is on the value side, but the company itself generally looks um, like a pretty solid company. So I might do 1% a year given history. They give it an 11 PE. Definitely nothing crazy. It's almost a flat company. 15% on the dividend discount rate. Margins have been down. Let's see what gross margin. Okay, so gross margin high 20, low 20, mid 20, mid 20, low 20. Operating margin 21, 13, 16, 16 down to 10. So it's just whether 2022 and beyond is going to be closer to this or closer to a little bit ago. Like I said, they have a little bit of debt, which we could see their interest expense be rising quite a bit, but um, yeah, it doesn't look like too much. But again, they had more debt over here than over here, so it might be dug into a little bit from the net interest expense, but it doesn't look like it's going to dampen um, margins too much. So it's been lower recently, but let's assume maybe 8 and 10 might be a little frothy. Let's do 7 and 9. And then they've been buying back shares pretty consistently. Let's do 2% share buybacks. I think I can bump up what they've been doing historically. Yield. And they're paying out, what did I say that was? So a little under $1 billion, paying out that much. I mean, I might give them a 3% bump, almost like they're doing an inflationary increase in dividend. This could be helped in two ways. So if they buy back shares, then they pay out less from a cumulative standpoint in dividends. So I'm thinking that might occur. Um, that's why the jump is 3%, whereas the revenue increase only 1%. Um, that's my assumption there. But even with that said, we're looking like it has to drop quite a bit more, about 47%, to get us to a 15% rate of return over the next 7 years, given these assumptions. But to me, this is definitely a company I would want on my, if I were a dividend buyer, if I wanted that free cash flow when I'm sitting there, if I'm retired and I want pretty much 4%. Like I said, this is just under 4%. We're at 3.81% right now, but this looks like a company that is going to, obviously if you want to buy it, you're going to have to do way more detail than what this is. This is just preliminary view on the company. But from just looking at the numbers for me right now, it's definitely a company I would want on my list to look into later. But for me, it's a bit frothy of a price where I'm going to have it drop a little over almost 40% before I even research what the company does and dig into a little bit on a more surface level. So thank you, and I hope you have a good rest of the day.